The economic low is probably not behind us. The market lows are probably behind us. Looking ahead, the ride is going to be a choppy one. Markets have rallied 50%. The MSCI World Index is up almost 50% from March lows. Going ahead, it is still possible that the markets may hit even higher over the next 12 months, 18 months. Very possible because liquidity is still very abundant. Interest rates are very, very low. Options in terms of investments also limited. So equities still look relatively attractive. But from an economic perspective, I think things are still playing out. I mean, you're seeing economies suffering second rounds of lockdown, second wave of infections. So things are still relatively unclear. They look better than what they did in the first half of this year, but still, it will take a while before we get back on our feet and before the economy goes back to the levels that existed before, COVID-19.
A lot of people juggling growth versus value plays at the moment. Where do you sit in that camp?
Well, we think that there's going to be a rotation away from growth towards value, very possible because value has underperformed. I think technology stocks have just skyrocketed this year. And we're not negative on growth. We think that, in the long term, technology will still be something that you need to have your foot in. I mean, you need to have some exposure in your portfolio towards technology because, it's going to be a game changer. It's going to change the way we live our lives. But there'll be some rotation, and we think that that cyclicals and value stocks could see some re-emergence in the next 12 months or so as economies reopen, and especially if a vaccine is found, that could lead to rotation out of growth towards value, and value looks relatively undervalued compared to growth.